Everyday chat and chart live during the New York session. Here, real traders share the raw truth, their mindset, technical analysis, and execution. This is where real traders show their skill set. Welcome to Tradin TV. This is your stage to shine.
Morning, guys. How's everybody doing? So let's talk about what I'm viewing in the markets right now, currently. Then we can talk about price action this past week, or what's happened so far this week. I hope everybody's had a great week. The markets have been a little bit choppy the last couple days. Fortunately, I was traveling, so I didn't end up taking any positions. And I also don't think I would have taken any positions even if I was home at my desk. So we'll go over, all these markets, from currency markets. We can cover the index markets, and we can cover, I guess, gold or some other markets if you guys want to. But I did tell you, last week that I was looking for bearishness on the dollar. If you guys came to the charts, right, and Monday, you saw this large wick on the open, right? Everybody, if you're trading FX at least, or if you're following the dollar, you would have seen this massive run higher on Monday. And I already mentioned to you guys that I'm still bearish on the dollar, right? Did I not? You guys can go back and watch the live. It traded into this bearish fair value gap pretty much at the Sunday open. So if we go back to the Sunday open, we had this very, very large wick, which this movement here, we did not see that in the euro. So if you guys were following price action, Monday night, or Sunday night, we traded into that inverted fair value gap, which took out the previous weekly high. So we have this previous weekly high, which is a very important level of liquidity. And we rejected that high. So after he took out the high, all right, you guys can see taking out the Tuesday high, rejected strongly. Monday was really just a retracement into this wick, and then we got follow through at least Tuesday and Wednesday. So if you're leaning long on Tuesday and Wednesday on the euro, you should have made some money, right? The daily on the 11th, I just want to make sure my days are right. Yeah, so Monday, right, this is just power 3 going into that daily fair value gap. So as I discussed, right, on Friday last week, I was looking for longs in the euro, shorts in the dollar. All right, this movement here should not have scared you. This movement here should not have scared you. As I mentioned, when I'm bearish on a market and the market's going higher, that's when I'm leaning short and trying to get short in a market. Okay. I can bring up the actual trade execution, which I believe I posted on Twitter already, just to show you guys the trade that I took on Tuesday. Is this it? No, that wasn't it. Oh, did I even take a picture of it? I don't even think I took a picture of it. I was traveling. Oh, you know what? Hold on one second. I got it. I took it on my Mac. That's why. We'll open it real quick, and I'll walk you guys through that trade. So I'm currently waiting until retail sales come out at 8:30. So this really was just a retracement into a 15-minute fair value gap. I was going long below the weekly open, right? You guys can see how nicely it bounced off the midnight open after the news release. So we have this news release on Tuesday. If you guys go check your calendars on Tuesday at 8:30, we got this very large displacement higher. And then leading up into like 9:30-ish, we got this nice retracement. Went long inside the fair value gap, added another contract. As this market started to turn around, so you guys can see here, I went long as it was trading into this fair value gap here. Even though it went against me, even though it started turning around and I got back towards break even, I added another contract and moved my stop actually below that low here. You guys can see this black line. So I adjusted my stop, took half the risk off the table on my initial position, added another position with my stop loss in the same area. So I took half risk off and added another R in risk. So in total, I had 1.5 R risk on the table. This trade ended up panning out very nicely. And this was a case where, initially I had planned a 2.5 R, but the scale in allowed me to add another R value and risk. So in total, I believe I got, how much did I get out of that trade specifically? I think it was like 2R plus another 3.5 R out of this trade. So you guys can see the power of just compounding your capital, not taking additional risk, but having multiple positions on, reducing your risk, and then letting the trade pan out in your favor. So you can turn a 2 to 3R trade into a 6, 7, 8R trade just by adding in another position. So if you're struggling right now and you're the type of trader that pretty much puts full size on one trade going into it, maybe you put full size into the trade right, as your first position, and then it goes against you. Maybe you want to slowly start adding into positions instead. Take a very, very light position. Maybe it's a micro, maybe it's a single standard lot, just to see how the market reacts. And then once it starts moving in your favor, that's when you add. So you might be struggling with trades where enter the position and goes against you directly, right? You kind of avoid that by not doing that, right? Slowly adding into the position as it's working in your favor, and not, going all, full size into the position. So that was the trade that I took on Tuesday. Didn't really see anything on Wednesday. So Wednesday, it pretty much just fell from London Open. So when I sat down in front of the charts, the market was already low. It was already down here. So I didn't take any additional positions when I sat down in front of the charts. What I'm looking at right now currently on the euro is we have this inverted fair value gap. So I think as long as we stay above that level, we should continue higher and maybe trade towards these highs. So I might take a trade live with you guys right now. Just a very small position. I'll map this out real quick. And we'll just aim for, I guess we'll just aim for these highs here. But I'm probably only going to take one contract. Let's see what the risk is. And if you guys didn't know, TradingView, I like using TradingView because it shows me the level, the amount of risk I'm taking on these trades. 9, 7, 6, 5. Let me pull up chats so I can actually see what you guys are saying. One second. What pair is this? Is euro dollar or euro futures? 0.19 or 1.16950. So the thing I like about TradingView is that it automatically tells you your risk right off the jump, right? 1.17570. So you guys can see that I'm taking $200 in risk to possibly make $575. Now, if it moves in my favor, we didn't see your EU trade analysis. It's the same thing. There's nothing different. There's still an inverted fair value gap there. Yeah, I can go over NASDAQ. Just give me a little bit. I got to make sure I'm entering positions in all of these. So you're going to have to bear with me. I'm managing many different accounts on many different platforms. It's kind of annoying because a lot of the trade copiers are not they don't have the right permissions, and some of them are just not they don't work. 16950. 1.1777570. So I have to place all these positions right now across all these different accounts. Order. Point 1650. I'll also break down this trade a little bit more once I get all these positions in. Let's see, euro. Because the euro is a different price, I need to make sure I have the right price. Just playing out a 3R because I typically aim for a 3R. It's probably not going to go 3R today because it's Friday, but you never know. If it starts moving in my favor, then I'll just adjust the stops, maybe add in. So my take profit, which is 3R, lines up with this half number. So 1.17500 basically. Jade is at risk. What's that mean? What's that mean? Capital. Man, it'll take like 10 trades across all these accounts. Not in the golden ages anymore. A lot of the firms don't have compatibility with trade copiers, so you have to go in and manually place all these trades. All right. Let's get back to the chats. Can I please analyze gold? Yeah, I understand that there's news in 20 minutes. I'm not so concerned about the news. If we look at our 12-hour chart, and maybe this is like an odd time frame that you guys need to study, but we do have this 12-hour fair value gap that we came down to, retested that very nicely. The last 12-hour candle is very bullish, so I'm just going long here. What else is there? Not much else. It's really just based off this hourly inverted fair value gap. And then if we study our market structure, right, what is all this doing? This is still creating higher lows and higher highs. So even this, I'm viewing this as just a retracement because this, I'm assuming, is going to be our higher low, and then we're going to trade higher. Am I not trading index markets? Index markets really aren't doing anything. I don't have like the daily ES on ES traded down to a daily fair value gap, but I like trading markets that are easier for me to read. I mean, index markets have the tendency to just go up and to the right. So I'm leaning bullish. It's just we need to understand that this is our displacement leg, right? So we have this displacement higher, and then this is all just sideways price action. I tend not to trade sideways price action until I know it's ready to leave that consolidation, because it's such a tight range that it's very difficult for me to actually find decent risk reward on a higher time frame, because I usually use like an hourly or a 4-hour stop loss level. Okay, so depending on how we react from this bearish fair value gap is probably what I'm going to assume for the short term. Because this market could still, basically compress and continue lower, and really we're just stuck in a range. So this thing could come all the way back down here before it really gets another leg higher. Okay, so we have this level here, again, the displacement. You have to understand that this market condition is just possible reaccumulation. Because we've taken out the all-time high here, and it's gone sideways. So we need to wait and see for signatures to send this market higher, possibly, right? So I don't have a whole lot of risk on. It's just one mini contract on Euro futures, which is $200 risk, but it's across 20 accounts. Gold's been sideways. I mean, I've mentioned it. Gold's been sideways. We rejected this daily fair value gap, so we need to get through this bullish imbalance if this market is going to continue lower. Yesterday, we have a nice bearish engulfing candle. I was talking to my community about this. Until we get above this sell-side imbalance, I think this market is going to remain bearish. And if the gold is going lower, typically that means risk on. Okay, because gold is seen as a safe haven asset. So if people are not moving into gold, they're going to be moving their money into crypto or index markets or foreign currencies. It's just about which one are they going to move it into. They're trying to find the strongest asset that all that money is going to shift to. Yeah, I'm long on the euro. Now we do have news out in 13 minutes, but I only have one contract on, guys. No, I'm not. I mean, depends on what breaker are we looking at. A 1 hour breaker. Which candle? I would like to see it just move away from this inverted fair value gap. Gotta save this screenshot. So every time you guys take a trade, you guys should be saving screenshots when you enter the trade, mid-trade maybe, and when you exit. And you should also be writing down how you feel once you're in it. Yes, I'm in the trade. Can you not see that I'm in the trade? Goodness gracious. How many instruments do I trade? It's like 3 to 6. I'll trade pound, euro, dollar CAD. Sometimes I'll trade these New Zealand dollar, Aussie dollar, commodity currencies. And index markets. So NQ, ES, or YM. Prashant, please stop asking. I'm in the trade, brother. Jesus. I'm in euro and I'm in euro futures. It's the same trade. Enter on the hour? Listen, if I enter on the hour or the minute, isn't it still the same price? So does it really matter what time frame I enter on? Even if I enter on a daily or a weekly, I'm still getting the same fill, right? The market is still trading at 1.17120. No, so the news trading is allowed as long as you're not opening and closing positions in like 2 minutes after the news. If I get stopped out, they're not gonna, take the money from my account. I mean, they're not going to reimburse me, right? So I take the full loss, but they're not going to breach my account. It's just if it goes towards my take profit in that first 2 minutes, which I don't think it will. That's pretty far. If it does, I'll just remove the take profit. So like on dollar, I want to see it trade through that level. Because all this market right now is just drifting lower. Okay. So I think if we get below this, it's going to continue going towards these lows down here. How do you easily find the previous day liquidity areas? Well, it's just previous day's high, the session highs, stuff like that. Nah, I've never really traded view op. What you guys will realize over time is that the tools that you use for analysis, whatever works for you works. For me, it was just ICT, so that's what I leaned into. If I stuck with what I learned originally, which was just engulfing candles, and just learned how to trade with context, I would be profitable. It was like one of the first things that I learned was engulfing candles. What do I think about oil? I mean, if oil is maybe going to follow gold, I could see this thing going lower. But again, these markets are just range bound. So gold and crude, they're very sideways. And I typically don't trade sideways markets like that. All right. When the market's trending higher back here, like 2024, early 2025, that's when it's like an easy read when you're just following that trend higher. All right. Right now, the trend for Euro has been higher. So I'm trying to follow markets that are easy to follow. Or markets that are poised to just continue in one direction. Now, I'm very cautious about this because it is Friday. All right. We've already traded higher on this daily candle. So I don't know. I only have one contract on. If I get stopped out, I really don't care. Make the chart display bigger. I think the team on the back end has to do that. What's a good prop firm for FX funding pips? If you're US based funding pips, if you have access to FTMO, that's great. FTMO is probably one of the top firms. But funding pips for US, there's a bunch out there. They all have different rules, so you have to make sure you read all the rules, right? We got news out in 7 minutes. See where this market goes. Part of this that could, violate my idea is that we are trading into this bullish imbalance, and it might jump from here. I don't know. I prefer not to, but I can't control that. So look at NQ. Nah. I could look at NQ, but there's nothing really interesting going on. Look at this. You want to trade in this? Go ahead. Go right ahead. I'm not trying to trade in this. Have you been trying to trade in this for the last, I don't know, 2-3 days? You're basically just trying to bang your head against the wall and force your will upon the markets. I don't know. That price action looks terrible to me. What does it look like to you guys? What does NQ look like to you? To me, this looks like a coin toss. What's my risk management strategy when I have 10% drawdown? I'll start out risking 1%. If I go down 2 to 3%, maybe even 4%, or maybe even 5%, that's when I'll decide to cut my risk. If I'm trying to keep the account. But that is a question that you have to ask yourself, like from a financial standpoint. Everybody is in a different area financially in their lives. For me, when I started building capital outside of, prop accounts, whatever, I could afford to blow the account and just reset. So if you want to continue risking 1% when you're going into drawdown, that's fine. Just know that you have to understand your edge and the stats from your system. So if I know that, my max losing streak was never really going to cross 10 trades in a row, I could just continue risking 1%. Yeah, I don't know. Index markets, again, they're just sideways for me. We have this displacement, but then after taking out all-time highs, we haven't really done anything. So I am not trying to, force my will upon the market. If I don't see anything that really stands out to me, even from a quick glance, maybe ES stronger because we're getting that rejection from this daily fair value gap. But it needs to move away strongly. And right now, this thing could just continue drifting lower sideways, chop everybody out of the trade. And by the time the market actually does turn around and the easy setup appears, you've already lost all your capital. Right? So instead of me trying to do that, I'll try and just go into a trade that makes more sense to me. How often do you backtest? Honestly, I did not backtest a lot. Because backtesting is good to understand your edge and how to refine your entries, your exits, stuff like that. But it's never going to be able to replace the feeling that you have when you enter a live trade. Guys, I already took a look at gold. It's sideways. It's sideways on the higher time frame. But we're getting a rejection from this daily fair value gap, so it should go. In my opinion, it should go lower. If we need to break through this buy side imbalance, that's it. So we'll see where the news sends us in 3 minutes. Yeah, a lot of your experience is going to come from live execution. Backtesting really only shows you how to, enter a trade, how to manage a stop loss. But the problem with backtesting is you just hit fast forward on the trade and you don't go through the emotional process of actually being in that trade live, right? Because you could just if you're in drawdown, right, and that trade is going against you, just hit fast forward to see if it goes to your stop loss and take profit. You can't do that with a live market. I can't hit fast forward and figure out if I'm right or wrong. And, when you're doing the back test, let's say that trade that you took in the back test took 15 hours to pan out. How are you going to feel actually when you're sitting in a 15-hour trade? That's the difference between backtesting and live. Okay. And what a lot of people do is they try and curve fit their backtest results to the live market. They're like, I did really good in this backtest. I'm hitting, a 50 to 60% win rate. My risk reward is 2 to 3R. And then when they go in the live markets, their emotions come right back up. Right. And they don't know how to manage their emotions. So this trade is going to either have one of two outcomes. It's either going to go to my stop loss, and we're not going to reject the inverted fair value gap, or we're going to respect it and trade towards the target. I'm completely okay with both scenarios. All right. Because I assessed the risk before I entered the trade. Now, if I want to scale in, I can't do that until 3 to 5 minutes after the news release, just to stay compliant with all the prop firms. Everybody check your heart rate. What's the lowest time frame I often trade? The lowest time frame I trade will probably be like the 5-minute. I typically won't go below the 5-minute. Which props am I using? Every one that I can. But funding ticks, if you guys use code JADE till tomorrow, they're running a 35% off sale. I don't know when not to trade. When the markets just really aren't doing what I want them to do. So if we don't reject from this hourly inverted fair value gap and I get stopped out for one contract loss, I probably won't go back in because it's Friday. All right, and you have to just be comfortable with the risk that you take. Oh, it's probably going to go to my stop loss. It's not looking very good. But we'll see. We're getting back towards the low end of the inverted fair value gap. Yeah, so like we've already moved away from the midnight open. So this trade that I'm taking is riskier. Because the daily had already pushed higher. But let's say if I do get stopped out and this day still closes bullish, I'm still probably going to hunt longs going into next week. I guess depending on where this weekly candle closes. And again, I'm not trying to do too much because it's summertime. GU much stronger? I wouldn't say so. Euro pound looks a little bit stronger. What about you, Jay? If I'm bearish on dollar, bearish on J. So we just traded up into a 4-hour fair value gap. If it doesn't reject, I'll probably take a quick stop and just call it a week. But I guess we'll see where this hourly candle ends up. There's still 26 minutes to go on this hourly candle. And the reason I don't make rash decisions just based off of where a candle's going is that you need to wait for the closure. Because let's say what if the closure pushes this thing all the way back up in the next 26 minutes and we get a really long wick, rejecting that inverted fair value gap, then it's probably going to keep going higher. Yeah, I'm already up 5.5 R from that trade on Tuesday, going long down in here. So, you know, if I lose 1 R on this trade, I'm not even losing that much from my accounts because I'm taking such a small size compared to the size that I traded. Trade copier for futures, I use TradeSyncer. Let's see. NASDAQ getting a bit of lower ahead of the open. And I think something that's going to help you guys a lot going forward in your trading career is you should have an objective each day you come to the charts. My objective today is to just trade small and not do too much because I'm not trying to give all my gains back on a Friday. Right? And I'm trying to remain even keeled and keep my emotions in check. So if that's my goal for today, I want to be able to take a loss and not care about it. Okay, if I've done that, I've completed my task for the day. Let's see. See how the 4 hours shaping up. 25 minutes from now, we'll get a 4-hour closure. So let's say if the 4-hour closes here, at least my stop will be below the last formed 4-hour low, right? And again, I can't control what this market does. You know, there's periods where the market will go sideways for many, many hours. But you guys can see here, back here, that even though this candle closed bearish, if your stop is below that 4-hour low or the next created 4-hour low, you just continue trailing the market up. And yes, it takes time to start actually moving in the direction you want it to. But if you keep trailing your 4-hour stop up, but look how long this market takes to actually start moving in that direction, right? You have 4, 8, 12, 16 hours later. You have to sit in the trade for 16 hours before it actually starts moving, right? Which is a very long time. And that's the part of live trading that cannot be replicated. You have to be able to, you have to feel what it's like to sit in these trades. Look, I almost got stopped out on that trade. You know, how many of you guys are, when you go into trades, you get extremely nervous and you close the trade when it gets really close to your stop loss, and then it turns around, and then you're like, why did I trade? Why did I close the trade? It never went to my stop loss. And then it just starts pushing you in a direction, right? That is not a good feeling. But that's because your decisions are driven by your emotions and not based off of the charts themselves, right? Yeah, the no-wick candle. There's a no-wick candle that's down here, right? But because we have this inverted fair value gap that's sitting just above it, I actually don't want to see that level go down there. You know, if it does, then my idea is 100% invalidated. But if it respects this inverted fair value gap and just trades higher away from that level, I don't really care about this no wick candle. Because not every candle, you know, not every candle that doesn't have a wick, it doesn't need to always be traded to, right? So just something for you guys to jot down. Just trying to trade with order flow. Oh wow, it's 416 people live with me right now. Nice. When do I decide to close the trade at break even? Usually when it's getting late in the day, right? When it gets super late into the day and I don't want to hold the trade any longer, I'll exit the trade. So let me just double check. I might actually add into this trade. Actually we have news out at 10. So I'm gonna add one more contract here, guys. Same stop loss. And now I have a full unit of risk on. But I want you guys to, you know, type in the chat if you felt like you were going to get stopped out on that trade. Because now look at the hourly candle. Right? The hourly candle, you need to wait for the closure to tell you what it's going to do. The closure is going to tell you everything. You should not be making decisions based off of a candle that's going against you. You were scared? Listen, even though I have lots of experience, I get shaken out too sometimes, or I don't get shaken out. I get nervous about trades. But I'm able to, in the moment, calm myself down and just remember that I pay the stop loss to do a certain job. Okay, I'm paying that stop loss to protect me from the downside. Okay, so at the outset, I already knew that my max risk was going to be $200, right? outside of that, I can't do anything, right? Outside of that, I can't do anything. And then I just wait, right? I can't do anything about this trade. It's either going to continue moving my direction or it'll come stop me out for a full loss. But you guys can see that I did not put a full risk on at the outset. Okay, now we have a very nice 5-minute projection. You know, there's a possibility to add into the trade because I'm thinking that a lot of this movement was just manipulation, right? So we have this consolidation being built up ahead of the news. This is just manipulation, right? Below that range, and then it's turning around now. Exit? Are you telling me to exit now? Are you telling me to exit or enter another position? Why would I exit? Why would I exit, guys? Didn't care if I get stopped out. It's part of the game. Yeah, exactly. It's part of the game. If I got stopped out, I would just close the charts, probably end the stream, or maybe I'll stay on the stream, answer some questions, and then go on about my day. That's exactly what I do every single day, guys. It's very boring. And I tweeted yesterday that I probably spent 2 to 3 times less time at the screens this year and made almost 10 times more money because I'm more dialed in with my process. Okay, I can't make the market move to my take profit faster. Okay, it might not get there until next week. Right? I just know that I'm aligned with order flow currently. Because if the market were bearish, why would it trade through this bearish fair value gap and then invert it? Right? To me, that doesn't make any sense whatsoever. If the market were bearish, it would respect this level and then just continue lower. So with the stop loss placement, all right, I'm using the candle that appears below that fair value gap. So we have this inverted fair value gap. My stop loss went below that level, right? What indicator do I use for the fair value gap? The rectangle. It's called the rectangle tool. I open this on the side panel and I click rectangle and I draw it out. That's the indicator. And so the thing is with fair value gaps is if you draw them manually, you'll learn to spot them much easier with your eyes. Because I can zoom in right now and show you a bullish fair value gap that's resting right here. Right? So if you're using either one, you know, maybe I should have waited for the news to come out and then I went long and then I would have a much better risk reward right now. But I can't control what the market's going to do after the news release. I just position myself properly as best I can. That's great, man. Busy saying he had the same exact stop loss as me before the stream. When would my SL go to the entry? When it moves like at least 2R away from that level. Okay, because right now, if I put it to where it is here, the next hour could technically trade all the way down here as a retracement and then still go higher. But I'm not trying to choke the trade out. Okay, I have the risk on. I have to be comfortable with it. Just leave it alone. Let's see if there's anything interesting on like NQ or anything. No, not really. Not really. How to know when to stay away from the markets ahead of time? When the higher time frames are just doing nothing. It's basically just sideways. So like when I look at gold, this market is really just sideways. You have a bearish fair value gap above you, and then you have a bullish fair value gap below you. And the market is just really just in no man's land right now. Like look at all this. When the market is ranging like this, you're only trying to participate at the extremes of the range. So at the lows, I'll be more interested. At the highs, I'll be more interested. But when it's trading in the middle, that's when people get chopped up and they don't know how to, mark out that range and trade according to the range, right? So when I look at gold, I don't have any strong opinion of that. What criteria do you look for when adding to my positions? A strong displacement. So this here, the 5-minute candle, this is our news candle here at 8:30. The next 5-minute candle, boom, huge displacement higher. That's when I added to the trade. At the close, really kind of as this 5-minute candle is getting close to the close. And that's because we're getting a nice rejection on the hourly from that inverted fair value gap that I marked out, before the news release. You guys keep asking about index markets. I don't have a strong opinion of them. This market is sideways. Again, I'm only trading markets that look poised to make a run. And that's all based off a high time frame. So I haven't really taken any index trades really because the daily has been very difficult to read day to day. Like if it trades into a bullish fair value gap, then at least I know I can stay long for the next couple days. But when it's kind of just like bouncing around and the daily are, we're getting small ranges or it's just chopping around, I just avoid those markets. And that's part of you learning how to filter out markets. Learning how to filter out markets that you shouldn't be trading is very hard because you don't know what looks good or not because you don't have enough experience in the markets to know. Which it takes time, right? Learning which markets to trade takes time. It's an instinct thing, but it's also an experience thing. Like knowing that a market is poised to go to a specific level. It comes with experience, right? I didn't just learn this overnight. I learned from actually losing money trying to trade markets that were doing nothing. So let's say if there was a really great setup in the euro, but I'm mainly a gold trader, quote unquote. I'm a gold trader. I'm going to keep trading gold. Even if it's choppy as hell in a sideways market, I'm going to force myself to trade gold. To me, that doesn't make any sense, right? Because all these markets are moving very similarly. If I saw this euro inverted fair value gap on NQ, I'd take the same trade with the same stop loss placement, with the same take profit, because I can frame out the risk. I know exactly where I'm wrong on the trade, where I'm going to stop myself out, and I know exactly where my target's going to be. Now, does it really matter what time frame? Does it really matter what market I'm trading? No. So based on this, we have a very large bullish engulfing candle. I don't care if it retraces here. It could retrace against me for the next hour. I'm still going to hold the trade because this is my invalidation. So this bullish engulfing candle low is now my invalidation point. But I don't know how long it's going to take for this to possibly trade in my direction. I could be sitting in this trade all day long. And I know I'm not going to be sitting on the stream all day long with you guys, but just know that today's Friday, right? And I'm most likely going to manage it at some point going into lunchtime or, later in the day. Am I mainly adding after engulfing candles? I'm adding when I get strong rejections from levels that I'm looking at. So this to me is a very strong rejection from that inverted fair value gap. I'm bearish on Dixie based on this quarterly time frame. So I've talked about this at length for a very long time. This here is just consolidation. I'm going to remove all the drawings that I have on the dollar. This here is just consolidation, right? So let me draw out a rectangle. We have this range, right? This here, this run higher is manipulation. At least that's how I'm viewing it. So this, all of a sudden, this down close candle becomes what, guys? This becomes a breaker. All right, because it's the last down close candle prior to running out highs and prior to shifting market structure. So even though this quarterly candle traded higher and people wanted to get bullish on the dollar, I actually want to see this maybe by the end of the quarter. We have a month and 16 days left. Maybe this candle's going to flip bearish. All right, and this would just end up being a power of 3. And let's say if it doesn't, though, I'm still bearish because nothing's really changed. Maybe we get a bearish fair value gap on the quarterly time frame, and then maybe Q4 trades up in here, and then beginning of next year, that's when we get continuation lower. But I'm thinking it's going to go all the way down here to these lows on the dollar. So until something really, really changes on that analysis, I'm basically sticking with it. So a lot of my trades have been long on the euro. Pretty much every single trade that I've taken in the last 2 weeks has been long euro. But I sit out all this. So even when the market's going against me, I don't do anything. I just wait for it to like pause, create a lower low maybe, and then when it starts pushing higher again, that's when I try and get long. Because I'm trying to trade with this trend. Right? It's respecting these fair value gaps, projecting, it's creating higher highs, higher lows. And then when the market does this, right, when it goes sideways or when it goes lower, I don't do anything. I just sit still until I get an area where it bottoms out, and then I position myself long again. Now that depends on how you guys like to trade. Right? If you're just an intraday trader, there's opportunity on both sides of the market, but I typically like to just trade in the direction of these higher time frames. We have a 5-minute fair value gap here. Again, my stop loss is all the way down here. I do not want to see it trade down there. We got an hourly close in 8 minutes. And when this candle is very bearish, right? I told you guys there are still 26 minutes left to go on the candle. Right? You have to give these candles enough time to print and actually tell you where the market's going to go. Because let's say if you were leaning bearish, now all of a sudden this hourly candle is closing very bullish. Right? You're basically off sides. On EU, when was the point when I would have been more certain? Honestly, I wanted to go long overnight because it traded down into this 12-hour fair value gap. Right? So when it traded down to that level, I wanted to get long, but I didn't go long overnight, knowing that I was going to be live with you guys today. Holy hell. You guys keep asking about markets that I've covered already. I'm not going to cover it again. If you guys want, you can rewind it. All right. Do I think ICT concepts work better with FX or index markets? They work for both. They work for both markets. Today might be a day where I'm watching paint dry, guys. I don't know. I honestly wanted to see a stronger closure here on the hourly, but it's not closing as strong as I thought it would for the 4-hour. The 4-hour is still going to close bullish. So even if it closes bullish, my stop is below the 4-hour low. And I'll just leave it alone. Because like I discussed, with these markets, sometimes they go sideways for a long time. But these lows are still being respected. But it takes 16 hours for it to start moving in your direction. That's a long time, right? I'm not going to stay on stream with you guys for 16 hours. It's way too long. No, there wasn't a raid on Asia low. I don't necessarily always wait for raids on Asia low, right? Because we have this consolidation here. And then we already had the run lower. So I do want to see this continue higher. It's Friday, though. I don't know how much more this market is going to trade. I mean, my risk is still managed. I already know where my stop loss is going to be. Are Fridays high probability? No. They're not. Not for me, at least. Yeah, we got news at 10. But I'm most likely not gonna be on here at 10. How do I become a trader? I've talked about it at length for sure. You guys can check out some of my podcasts. I got into trading when I was, geez, I don't even know. Been over 14 years. 21, 35 now. Basically got into trading because I dropped out of college, came back home. My friend was trading at the time. You know, kind of just demo accounts. I got sucked into it. Went back to school for finance. Couldn't get a job on like Wall Street or anything. And continued trading throughout, you know, the rest of my career as a, you know, traditional worker in the workforce. My Counter-Strike update hits different. I think on Kick my title says Counter-Strike. How do I change? I don't even need to change this. Got to change this dashboard. Session info. Gotta edit this. Not playing Counter-Strike. Trading. Down for Counter-Strike? Yeah, maybe I'll play Counter-Strike with some viewers. Do I use the bonds to determine where Dixie is going? Sometimes. So bonds and yields sometimes lag behind what dollar is doing. I don't always follow yields. But typically yields, if the yields are going to go lower, typically dollar will trend lower as well. So right now, I think the 30-year looks stronger than all these other ones. But we did have this nice displacement lower. This maybe is just consolidation before that next leg lower. Right. Overall, I'm still bearish on the dollar, though. What's my comment on low time frame scalping? You just need to have an edge. You need to have an edge first and foremost. Like having the edge is way more important than the time frame that you're trading. But I will say that if you are trading on the low time frames and you find yourself trading way too much and you're not really learning anything, then move up time frames. And for me personally, guys, we're all getting into trading, right? For what? For what reasons are we getting into trading? I would say the number one reason that most people try to get into trading, not only for the money, but for freedom. Right? You're trying to trade to get your time back. But once you have your time back as a trader, do I want to sit in front of the desk for 8 hours a day scalping the 1 minute time frame, losing my hair? Right? I'm not trying to do that. So the more and more that I've traded, the more and more I've gotten comfortable trading these high time frames, not taking a whole lot of trades and still making a fair bit of money, right? Why am I comfortable trading when we don't have the PO3? Well, I already am assuming that the PO3 already happened during London session, you know, during Asia session. And the fact that we broke through this bearish fair value gap, that's why I'm not expecting this market to go lower. Because from a bullish standpoint, I actually don't want to see it come back below the fair value gap. If we've already traded through it and rejected it and getting a nice strong bullish hourly closure, I'm not expecting it to go lower because based on time, it shouldn't, in my opinion. I think the intraday low should already be in place, right? How to join a traditional prop firm for a retail trader? Well, you need to have a track record, right? And then you need to have the network. I did not get a position at a traditional prop firm without a network. Because people don't really, you know, large firms don't really treat prop trading track records as your entry point, right? If you have like a 5-year track record in a personal account, that's great. But my 5-year track record is in prop, you know. I haven't traded a personal account like for 5 years to get that track record. Which, do I need to trade a personal account now? Maybe not. Like, if the prop firm is giving me enough capital, you know, the traditional prop firm is giving me enough capital, maybe I don't need to trade my personal capital, right? Because it's an additional risk to me. If I trade prop capital, you know, if they give me a couple $1 million to trade with, do I really need to risk my own money? Where if I take a loss, my net worth is now being impacted. What size account? It doesn't matter what size account. If you can't manage a $5,000 account, you're never going to be able to manage a multi-million-dollar account. Never in a million years. So you have to learn how to build your mental resilience and things like that on a small account first. If you can't do it, you know, on a $5,000 account, what makes you think you could do it with a $100,000 account? It's all just a numbers game. So let's say if you have a $5,000 account and your max drawdown is going to be $1,000. How do you react when your account goes into $500 or $1,000 of drawdown? Right? Because with more capital, those problems that you have with a small account is magnified. Right? You're taking larger losses. Your emotions are much more volatile. When were you so emotional in a trade? It took me a long time to figure that out. My emotions are still there. So like, even when this market is getting very close to my stop loss, my emotions are still there. I'm still frustrated. Like, I could have gotten a better entry, but I'm not going to just abandon the trade because it's going against me. Okay. I set the risk in place that I wanted to risk on the day. All right. I don't know. This is like 4 ticks away from my stop loss. You know, it's getting very, very close to my stop loss. And if you guys were wanting to stream, I'm like, I don't know, guys. I think I'm going to get stopped out here. But now that we've rejected from that inverted fair value gap, I have a strong opinion that I'm not going to get stopped out now. Oh, for the track record? I would say probably 25K. Probably want to see you manage a little bit of money, you know? How did I get out of the safety net? Essentially it was, you know, right time, right place, right time. I was able to get the trailing drawdown and stop in like a day or 2 days. And then from there, it was basically just keep trading until I met the consistency rules. But there's 2 ways you can go about it. Again, if you don't care about the eval cost and the sign up costs, try and pass it as fast. Try and get through that stage as fast as possible. If you do care about it, because it is expensive, let's say if you get 20 accounts, the activation fee is what, $150? So 20 times $150 is, you know, to activate 20 accounts is $3,000. If you care about the $3,000, you want to take as long as possible to try and pass that intraday trailing rule. But you don't want to do it too quickly. When do I move my SL to BE? Not yet. It needs to go at least 1-2R before I move my stop loss to break even. And it needs to reject in a strong manner. Did I not give away any 25K accounts? I'll mention a giveaway towards the end of the stream. What's the minimum? Oh, you already asked what's the minimum capital to build a track record. I would say, yeah, 25K. Maddie's asking, I only trade NQ. What other markets should I start studying? It doesn't really matter what market you pick. Just trade it long enough to learn the nuances of it, when it moves, what news you should be on the look, you know, on the hunt for. You know, what's gonna actually make that market move. And then it's just about getting comfortable with it. Because I've traded majors long enough to understand dollar and all these currency pairs. And then when I switched over to index markets, it was hard for me because they were moving at different times. And you're gonna go through the same process that I did when you pick a different market, right? So when you trade a different market, you just have to get used to it. And there's nothing that's going to shortcut that process. There's nothing in the world that's going to be able to shortcut the level of experience that you need to have just by going into that market and trading it, right? How can you trade with me every day? You can apply to my program, but I'm not streaming public every day. I think if I was streaming public every day, you guys would get way too much value. And my time, my time is expensive, unfortunately. I make good money trading. I make good money with education. And I can't give my attention to everybody. And I'm just going to be honest with you guys. I'm certainly not going to give my attention to people where they're in the chat, I cover a market, and then they ask me to cover a market again. That would drive me crazy. If you're in my chat asking me every single day, what's this doing? What's this doing? What's this doing? You're basically looking for a silver spoon and you're looking to shortcut the work that you have to put in. Hands down. So my time and attention are expensive, unfortunately. If you were making a good amount, Kimmel can say, can you educate me on anything besides trading? Kimmel, I think I could educate you on some Pokemon cards. Some Pokemon cards and some CSGO cases. We'll talk about the economy. I think I'm gonna stream with Kimmel live later today, guys. Just a casual stream talking about different things. Outside of trading, we talk a little bit about trading too. But it's important to have a balance in your life. You don't want to just make markets about your life, right? Like, markets are vampires. They drain a lot of your energy. And I wish I knew this before, but learning how to limit the amount of time I spent studying would have been so much more beneficial. Like, if I just learned how to take one trade a day, I would probably be way farther ahead of where I am right now. Did I ever backtest? I'll be honest, not really. I do take importance to news. Ahmad is saying I don't take it, I don't have any importance to news. I do. There is a level of importance of news. But retail sales is not one of those news events. Like, retail sales, I'll position ahead of time, whatever the case is. The news events that I typically care about, though, are CPI, NFP, and FOMC. Those news events can often drive markets for a very long time. Because we had CPI on Tuesday, didn't we? Yeah. So we had CPI on Tuesday. If we go back to Tuesday, right? This is Tuesday. If my day separators show up. If Tuesday does something like this where it creates the high of the week, and then we get something like this, all of this is just, in my opinion, just retracement. Because let's say if this is a major piece of news, a lot of times the markets will just kind of go sideways, but drift in the direction that CPI prints. So each one of these retracements, I just look at it like, manipulation to get people off sides and then continue in the same direction. Right now, this is like watching paint dry. Which, if you guys are in my program, you guys would know a lot of my trading is watching paint dry. A lot of your trading, if you're watching this right now, should be watching paint dry. Because I can't force this market to start moving my direction. There's nothing I can do about it. So if it takes 2 days to get to my take profit, I can't do anything about that, but I know I have to manage it before the close today. That's all I need. That's all I know. So I don't know if this trade is going to give me 1R, 2R, 3R. I have no idea. I don't know if it's going to give me a full stop out. It got very, very close to our stop, but I'm still following the same process, regardless if I'm up, regardless if I'm down. How do I get over revenge trading? You just have to get... Revenge trading is one of the biggest problems for a lot of traders, because revenge trading causes over trading and it causes over leveraging. So revenge trading is just the fact that you cannot accept a loss. And I tweeted this yesterday. If you can learn how to take a loss and end the day on a loss, you're, again, much farther ahead than most traders out there. Because that is a skill set on its own. Learning how to sit with a loss and go into the next day on a loss. Because if you look at an equity curve, you will have points where that equity curve dips and, the markets aren't doing what you want them to. It's how do you flatline yourself so you don't do too much damage to yourself. I have a very large watch list, but I'm only trading like 6 things. Maybe not even 6. 5. Euro, pound, NASDAQ, ES. 4. But it's good to have the watch list to just see the flow of money. Like, where's the money going to go to? Is it going into crypto? Is it going into gold? Is it going into any of the other foreign currencies? Would I move to Dubai? No. Even though I would save a ton on taxes, I'm far from family, and it kind of feels soulless when you're out there. It just feels like a tourist destination, to be honest. I think it's lacking culture because it's a new city compared to, like, other countries. It's lacking that culture. How do I deal with the possibility of price moving without me? I just don't care. I think the less you care about your trading, the better you're going to do. It's just plain and simple. If you understand the probabilities behind trading and you stop putting so much weight behind every single trade, that's when you do really well. Because the traders that make the most amount of money are typically the traders that don't need the money. So that hourly candle didn't have a lower wick, so we just came down and created that wick. But I guess we'll see where this hourly ends up. Again, my stop loss is below that hourly low, so I'm not stressing out about this trade. I really don't care. Even if it turns around on me and goes all the way back to my stop loss, I'll just take the loss and come back next week. But even taking a loss and going into the weekend, right, that is an exercise in patience and managing your emotions. Like, how angry do you get when a trade stops you out? If you get angry, that's an emotional trigger for revenge trading. Do I always close before the close? Yeah, most of the time. Because I'm more of like an intraday, intra-week trader, but based around time. Like, if I have a weekly idea to swing, I'm still in and out each day. Like, I'm usually never holding overnight that much, unless I really think it's going to be a really good swing trade. When I started becoming profitable, what was I using? Just rectangles. Honestly, just rectangles and lines, horizontal lines. Because the shift to profitability is more so how you manage your emotions in your trade. And that's 100% my biggest problem was my emotions. Like, I could not stop over trading, I could not stop over leveraging, and I couldn't stop revenge trading. So nowadays, I never get too confident in trade. I never get too angry about a trade if it goes against me. Because again, it's your emotional volatility. If you get too super excited about a trade, you're more likely to make mistakes on the next trade, right? And that's when your equity curve does this. And that's the study that you need to do when you look at your journal. Or let's say you get really frustrated about a losing trade, and now all of a sudden your equity curve does this, goes straight down because you're over leveraging on the next trade. You're not following the plan, right? You're doing a bunch of stupid things, and your emotional volatility is all over. So instead of being up and down, up and down, up and down, you're trying to be calm like this. Regardless if the trade's going against you, regardless if it's going in your favor. I know it sounds like very robotic, but you shouldn't really have any trading excitement. All right? You can get excited about following your process and your rules and getting results from that. Right? Because I was getting excited hitting 6-figure days on the Apex accounts. But then the next day, it's right back to business. Next day, that next trade, you got to put everything that you were feeling from that last trade behind you, because the feeling that you had in that last trade has nothing to do with the trade that you're taking right now, right? What I look for technically, just strong rejections. Just strong rejections. So with these engulfing candles, you know, my stop loss goes below the low because ideally it should not go back below that level. If it does, it's just part of the failure rate when I'm trading these setups. So I would say engulfing candles, I probably have 60 to 70% win rate on these candles using a stop loss that goes below or above the high. So if I get a bearish engulfing candle, I'll put my stop loss above the high. Just like this one, right? So if you look at this bearish engulfing candle here, right? If your stop loss was above this high, this is just a retracement into this fair value gap, and then it goes lower. Right? But it goes in your favor, and then it comes all the way back, but then it goes lower again. But if your stop loss is in a proper place, you shouldn't have to worry about it. So my stop loss is in a proper place, even though this thing is retracing pretty hard. It's essentially where my trade is going to be invalidated, right? If it goes down to that level and takes me out, the trade is no longer valid. Yeah, engulfing bar play, exactly. But again, all these setups have failure rates, and you have to be comfortable with that. So if I'm only right on 30 to 40%, or sorry, if I'm only wrong on 30 to 40% of my trades, I have to calculate the downside of that. So if I'm going to lose on 4 out of 10 or 5 out of 10 trades, I have to make sure that my risk is in line where if I get stopped out, I'm not going into deep drawdown. Okay. Does your cat help trading? Yes, it does. My cat definitely helps with my trading. Keep me calm sometimes. Let's see. I'm probably only going to stay on for like another 10 minutes, guys. Because the structure that I want to see is here. Okay, we rejected the inverted fair value gap. We have a bullish engulfing candle. And I'm just going to leave it alone. Right? If it comes all the way back down and takes me out, my stop loss is in a place where that's where I want to be wrong. Okay? I want to cut my loser quickly. How do I relate my experience to ICT trading? I don't really care. Like, end of the day, guys, everybody has a different journey. My journey is not going to be the same as yours. Your journey is not going to be the same as mine. Like, your journey has nothing to do with ICT's journey. It doesn't really matter. What matters is the journey that you're on right now. Are you on the right path to becoming a profitable trader? Are you doing the things that you say you should be doing? Right? If you say you're not going to overtrade and you find yourself overtrading, what does it have to do with what does it have to do with the way that I trade? Right? That has nothing to do with it. So you have to take ultimate accountability of what you're doing in the markets right now. Yeah, of course I'm mindful about taking buy-side liquidity, but again, I'm in the trade based on my analysis, and I can't do anything about it. All I can do is manage my risk, because I'm not gonna just cut my trade because it's going against me. Right? You cutting your trade because it's going against you just shows that you have a lot more work to do when it comes to your emotional control. So if you guys missed it, when I sat down with Pauline and we talked about psychology, right, and your mental resilience, you have to think about trading like you're taking a bus. You have a final destination that you want to get to. Let's say you're trying to travel across the country. I have a one-way ticket to California, which is my take profit, quote unquote. But what they don't tell you when I buy the ticket is how many stops it's going to take along the way and how long it's going to take to get there. I just know I'm going to end up eventually, hopefully, at my destination, which is my take profit. All those stops that the market makes along the way, I have no control over. I'm not the bus driver. I'm just on the bus. That is trading. So I don't know if this market is going to go sideways. I don't know if it's going to go stop me out. All I can do is have analysis that is in line with a higher time frame, right, based off of this inverted fair value gap. And then I just wait, right? Because I can't, even if I add 100,000 contracts to this trade, I very highly doubt that it's going to just push it to my take profit. Well, maybe it would. 100,000 contracts is a lot in the euro market. But I cannot force the market to go to my take profit when I want it to go. All right. Okay. So this is part of control. You have to give up the control that you're trying to have over the markets. Guys, I'm not covering any market that I'm not interested in. I'm not here to provide a signal service. I'm telling you how I manage my trades and giving you my thought process behind it. If you pick up something that you learned from this trade and tie it into whatever market is you're trading, I guarantee you it's going to take you very far. Okay, so the next trade you place in hogs or corn or GBP, JPY, manage the risk and accept that you have no control over that trade once you're in the trade. All you can do is have your analysis, and that's it. Have your analysis, have your point of invalidation, and have a place where you're trying to take your profit. Other than that, once you're in the trade, there's nothing you can do other than avoid the same mistakes that everybody else does. The mistakes that everybody else makes is that they get super emotional. They see their P&L going up and down, up and down. They can't sit in the trade long enough for them to see it actually pan out if they're right or wrong. This stop loss down here means I'm wrong. Until it goes to that level, I'll just leave it alone. This take profit means I'm right. Outside of these two happening, I don't do anything. Unless it starts moving in my favor where I can manage the stop loss. So let's say, the candle closes, I don't know, somewhere in here, and then the next hourly candle with news pushes it up higher. Maybe I'll move my stop loss to an hourly low. But other than that, I can't do anything about this, right? Do I ever trim my trade before my stop? Not really. Not really. How to navigate weekly profiles, news, etc. It's just experience. Knowing what those weekly profiles are and actually watching them pan out over and over and over and over again. And trading news. How many FOMC weeks have you guys traded? Because I can tell you, over the course of 14 plus years, I've traded a lot of them. And every single week on an FOMC week typically is the same. But that's experience that I can't pass down to you guys. I cannot just all of a sudden transfer all my knowledge and all my experience in the markets to you. All right, you have to go through the process. And there's no shortcuts in the markets. Everybody loves to think that they can watch a couple videos and all of a sudden become a profitable trader. It's not the same. If I was to take golf, and I always bring this analogy up, maybe you guys are sick of hearing it from me, but if I'm learning golf lessons from Tiger Woods and he tells me how to swing a golf club, do you think that's really going to translate when I pick up a golf club? I've never swung a golf club before in my life, by the way. I know the perfect swing. Tiger's telling me exactly what to do. Does that actually translate into the motions of my body? No. because I actually have to sit down and do the reps or stand up and do the reps, right? These are all things that you guys have to learn how to do on your own. So each thing that you do, whether it's entries, whether it's exits, whether it's emotional control, you're getting reps in all those different categories. Think about this as like an RPG. If you guys play video games at all, right? Entries, exits, trade management, psychology. And then you can add in all the different ICT concepts you want. I don't really care. You can put turtle soup or liquidity raid. Just put liquidity raid. And put breaker. Put order block. But when we look at this skill tree, right? Let's just say we're looking at this skill tree. And here's your skill points. Right? Up in the right-hand corner, you have skill points. Unallocated skill points. But when you're starting out, I'm only going to give you 2 of them. How are you going to distribute these skill points? Maybe you want to work on entries. And then maybe you want to work on exits. Is this enough for mastery? Is this enough for mastery, guys? Let's say this skill tree branches out and it, the max skill cap down here is like 20. You can put 20 points into entries. You can put 20 points into exits. You can put 20 points into trade management. You starting out trading, think you watch videos and all of a sudden you get a shortcut and buy skill points. Like you guys think that you could get 2,000 skill points and now all of a sudden I cheated the game and I can just allocate all these different skills into all these different things that I don't have a clue about. Right? It takes time to build out a skill tree. And when I was coming up, I didn't have any of these things either. But you just have to understand that you have to align yourself with something that makes sense and things that you struggle with the most. Okay? So, in my opinion, a lot of traders just have a problem with psychology, first and foremost, because they have unrealistic expectations out of the market. So, this ruins everything else. If you don't have the right mindset about long-term trading goals, all these skills don't really matter. Because you're going to force things, you're going to start jumping between different concepts because you think that you can learn faster. And that's a mental, it's a mindset problem. You have to have a growth mindset where you understand like all of this stuff that I'm trying to learn takes time, takes a very long time, and I'm really bad at certain things. So if I'm really, really bad at psychology and revenge trading, you probably should focus on that first. You have to figure out what is holding you back the most because it's the inchworm effect. Okay, you're never going to reach your max peak performance if your biggest flaw is revenge trading and over trading and over leveraging. Just plain and simple. No matter how good your entries are, no matter how good your exits are, no matter how good your trade management is, no matter how much you understand these 3 things, as far as concepts or whatever strategy you want to use out there, volume, doesn't matter. RSI, whatever indicator you want to use, VWAP, I don't care about that. If you can't understand that your psychology and your expectations out of trading are holding you back the most, then you're never going to make it. It doesn't matter how many skill points you put in here. If your psychology just stays at a 1 or a 0, you're never going to get anywhere. So you can have the best entries, but if your psychology is terrible, that doesn't really mean anything. And no, you're not going to get 20,000 skill points right off the bat. Okay? So I'm going to hop off here in a little bit, guys. Again, this is really based off of this hourly structure, but I don't know how long I'm going to be sitting in this trade. I'm going to be sitting in this trade until it actually starts moving my direction. Okay? We have news out in another 30 minutes, right? With the 4-hour candle, as long as it respects the 4-hour low, I want to see it continue trading higher and maybe trading to this high. If it doesn't, my stop is where it is. I'll take the stop loss and I'll just come back and rinse and repeat the same process. Rinse and repeat the same process. If I go on a losing streak, size down, trade smaller, trade less. Don't get too overconfident. Make sure I'm following all the rules that I say I'm going to follow day in and day out, week in, week out. You know, on a CPI week, if I tell myself I'm not going to trade until Tuesday and I find myself in a trade on Monday, I don't care if you make money or not, you're breaking rules. You know, so if I see even any of my students or anybody in the chat or anybody publicly say, I'm not going to take a trade until CPI, and I see you in a trade on Monday, the day before CPI, you should be ripping yourself a new one, because I could rip you a new one, but you're not taking accountability for that, right? If you say you're going to do something, you don't do it, you not only, you don't have respect for yourself, you don't have respect for your time, and you don't have respect for the game, right? All of these things need to be aligned. You have to understand that you're on this journey by yourself. Nobody's going to come save you. Nobody is going to come and delete your bad habits for you. All right. So if I have skill points over here, you kind of have to be greedy. If there's somebody in the chat right now, it's like, my psychology sucks. Essentially what you're saying is, well, donate me some of your skill points. I want some of that. Right? Send me some skill points. And me as a selfish trader, because this game is a solo journey, I'm not going to donate you any of my skill points. I can't donate you any of my skill points. There's no sharing system in this. There's no sharing system here, right? But what you guys are looking for are trade setups. I want to see trade setups. Give me trade setups. The problem is that when the people that you follow, they don't know what's going on in the markets, now you have no idea what you're doing in the markets. So let's say if I disappear and I don't give you what I plan, what I expect for next week, can you go out and do that on your own? Let's say all of a sudden I stop streaming, I stop sharing, or whoever mentor you're following stops sharing. Now all of a sudden you've quit your job and you're relying on this to pay your bills. You haven't learned a single thing. You're relying on somebody else. And when you take a loss, now all of a sudden you're blaming that person and you're not learning anything. Right? So when you're going through trading, you should be learning something every single day. I learn something new about myself every single day. And that alone is going to make you a better trader, because by the end of your journey, if you decide to quit or you stick with this, you're going to learn so many things about yourself that you didn't know. And either you're going to become a different person or you're going to stay the same, just like every other failed retail trader out there. They're going to blame the markets. They're going to blame other people. They're going to say that this game is rigged. But in reality, it's just that they can't make those changes to their own personality. So you end up running in the same place for years and years and years. And I say that because I was there. I always thought I knew the most. I was a know-it-all. So even more experienced traders, they would tell me certain things and I'd be like, that's not right. The market's got to do this. And that's not how markets work. Markets are not absolute. They don't work like that. You have to accept that you can be wrong, and you can be wrong a lot and still make money. Yeah, I can be wrong a lot and still make money because I know how to manage my emotions. I know how to find an edge in the markets, and I know how to be patient. All right. So I hope you guys enjoyed the stream. Obviously, again, maybe at the next 4-hour closure, or if this trade continues moving in our direction, I might look to manage this trade at 1, 2, 3, 4 p.m. Eastern before the market closes. Okay. Other than that, I'm not doing anything with this trade. I'm just letting it pan out. I don't know if it's going to go sideways. I don't know if it's going to rip to my target on the next news event. I don't know if it's going to go my stop loss. All I can do is manage my risk, be comfortable with the risk. Maybe if you're feeling uncomfortable, maybe move your stop loss to this next 15-minute low. Because then if it chops around sideways, at least you get out with half an hour loss and not a full loss. But that's the decision that you have to make on your own. I'm not going to make that decision for you. I might make that decision when I hop off stream. But again, I'm not here to handhold you guys. I'm here to show you the process of becoming a profitable trader. Okay. So I hope you guys all have a great day. Obviously, all have a great weekend. Trade safe. Don't do anything stupid. If you've done really well this week, there's no need to give it all back on a Friday. All right. So I guess I'll quickly go over NQ. So we respected this sell sign imbalance and it's trading lower. So this actually, sometimes I like to see this. especially if I'm long in the euro, because if money is coming out of the US markets, it should be going somewhere, right? Just because this market is going down, though, does not mean it's all of a sudden turning bearish. Okay, so we just ran above all-time highs. Maybe it just wants to retrace to this level down here, right? This order block down here, okay? But if it goes down there and still respects that low, there's nothing that's changed about this market, right? It's just trading down to a discount. So if it's just going to do this, you know, I'm just essentially waiting for this consolidation to stop, okay? I'm not going short, though, on this market. I'm just waiting for it to stop. And then when it starts turning around again, maybe it starts creating a market structure shift to the upside. That's when I'll get long again. Because I tend to not short index markets, especially when there isn't like anything crazy going on. Like if there's inauguration with Trump going in office, all those tariff speeches, that's when I'll tend to lean short when the headlines are like very, very bold. But if there's not much going on, I'm just assuming that it's going to try and chop people up, get people short in the market, and then it'll start slowly drifting higher, start punching higher, and then all those people that were short, you know, they're either holding on to losers or they find themselves off sides. All right, so I'm not doing anything with the index markets right now. Really just waiting for euro to actually do something. All right. All right, guys, take care.